Bitcoin to $1 million? Multiple experts are saying huge things are coming. From mind-blowing price predictions and institutional adoption to real-world use cases, this is a crypto update you can't afford to miss. Find out what's driving these bold forecasts and what it means for your portfolio. In the latest video from Altcoin Daily, the host discusses Bitcoin's potential growth, highlighting Pomp's recent $125 million Bitcoin purchase through ProCap Bitcoin. This adds to the growing list of public companies investing in Bitcoin. The host also mentions recent news about Chainlink partnering with MasterCard to allow over 3 billion cardholders to buy crypto, and the U.S. Director of Federal Housing allowing borrowers to use crypto assets for mortgages. The video further covers how these events affect Bitcoin price and briefly mentions real estate tokenization and a platform called Cookie.f Fund for content creators to earn crypto. The host also discusses Bitcoin's growing demand from ETFs, companies, and even governments. The increasing institutional adoption of Bitcoin is certainly interesting. News like major financial players getting involved often leads to price increases in the short term. While it's impossible to predict the future of Bitcoin with certainty, the growing acceptance by established institutions seems to suggest a shift in how it's perceived, from a speculative asset to a potential store of value or even a payment method. The involvement of companies like MasterCard could further streamline the process for everyday users to interact with crypto. The tokenization of real estate also seems to be a promising trend, though it's still very early to see how it will evolve. In the latest video from CryptoRover, he discusses a $4.37 million Ethereum trade based on a power of 3 chart pattern and several bullish indicators. He points out large, long liquidations, low funding rates, and the upcoming EP 7702 update as positive signs. He observes Ethereum whales and spot ETFs accumulating Ethereum. CryptoRover predicts Ethereum will first hit $3,000, then $4,100, with a long-shot target of $5,700. He compares Ethereum's price action to Coinbase stock and highlights a divergence, with Coinbase surging due to positive news about the stablecoin bill passing the Senate. He also analyzes Bitcoin's correlation with the M2 money supply, suggesting Bitcoin could reach $110,000. A 12-hour chart shows a bullish MACD crossover similar to one that preceded a previous price increase. While CryptoRover's enthusiasm is infectious, his predictions should be taken with a grain of salt. The crypto market is notoriously volatile, and relying solely on chart patterns and historical correlations can be risky. The power of 3 pattern, while visually appealing, isn't a foolproof indicator. The regulatory landscape, particularly in the U.S., is still evolving, and while the stablecoin bill passing the Senate is a positive step, its ultimate impact on the market remains uncertain. The correlation between Bitcoin and the M2 money supply is interesting, but correlation doesn't equal causation. Plenty of factors could influence Bitcoin's price independently of the M2 supply. In the latest video from Lark Davis, he discusses a study from the Journal of Risk and Financial Management predicting Bitcoin could reach $444,000 by mid-$2,000 by mid-2026, and even $1 million by 2027. The study bases this on a supply and demand model, noting Bitcoin's limited supply at 21 million and the shrinking liquid supply due to long-term holders. The model also considers increasing institutional adoption and demand as key drivers for the price surge. Lark mentions other predictions, including MicroStrategy's model suggesting a $13 million Bitcoin by 2045 and ARK Invest's projection of $1.5 to $3.8 million. He acknowledges criticisms of the model, such as simplified assumptions and uncertain supply estimates, but remains optimistic about Bitcoin's long-term prospects, suggesting a 7-figure Bitcoin is inevitable, even if not by 2027. He also mentions factors like strategic Bitcoin reserves by countries and companies, the Fed's new crypto rules, and the possibility of a hyperbolic price explosion due to institutional FOMO. While the idea of Bitcoin reaching such high prices is exciting, it's good to be cautious. Market predictions, especially those based on models, should be seen as possibilities, not certainties. Things like global events, regulations, and even investor sentiment can heavily influence the price. The increasing institutional interest is a positive sign, but the market's still quite young and unpredictable. In the latest video from Ben Cowan's channel, Dana asks Ben to teach her about crypto so she can understand Sebastian's job. Ben reluctantly agrees, starting with the history of crypto, tracing it back to ancient Greece. Dana struggles to keep up with Ben's fast-paced technical explanations, eventually getting frustrated and crying. Finally, Ben simplifies things, revealing Sebastian works on making blockchains stateless using vertical trees. It's funny how Ben's initial resistance to teaching Dana turns into a surprisingly in-depth, though chaotic, history lesson. The video's humor comes from the clash between Ben's technical focus and Dana's desire for a simple explanation. The bit about Sebastian's work with vertical trees and stateless blockchains piqued my interest. It seems like a complex topic, and I'm curious to learn more about the practical applications of this technology. In the latest video from Coin Bureau, Nick discusses why companies buying Bitcoin have seen their stock prices increase and whether altcoins like Cardano, ADA, and Polkadot, DOT, could see similar price gains by implementing the same strategy. He explains that these companies benefit from the projected future value of their Bitcoin holdings. However, altcoins like ADA and DOT have different goals for their treasuries, focusing on ecosystem growth and stability rather than simply price appreciation. Cardano plans to use its treasury to bolster its DeFi ecosystem, while Polkadot aims to diversify its holdings. Nick also discusses the potential for these altcoins to generate revenue to fund future Bitcoin purchases and engage in strategies similar to Bitcoin treasury companies, but notes that few altcoins have the necessary cash flow. He concludes that while altcoin prices may not skyrocket due to Bitcoin treasury strategies, DeFi protocols on these networks could benefit from increased Bitcoin liquidity. Numbers mentioned include Cardano holding $1 billion in ADA and allocating $100 million to start, Polkadot having $100 million in treasury assets, and a proposal for Polkadot to buy $2 million worth of wrapped Bitcoin, T-Bitcoin. It's interesting to see how differently altcoins are approaching the idea of Bitcoin treasuries. While mimicking the stock market strategy might seem appealing at first glance, it looks like Cardano and Polkadot are taking a more measured approach, focusing on the long-term health and stability of their respective ecosystems. This more nuanced approach seems like a smarter move in the long run, especially given the volatility of the crypto market. It's also important to keep in mind that Bitcoin's past performance doesn't guarantee future results, so simply holding Bitcoin doesn't automatically equal profits. In the latest video from CryptoStros, while enjoying a drive in his new car, he discusses the current crypto market. Bitcoin holds steady at $1,075, showing encouraging signs. However, altcoins are struggling to maintain momentum, with retail investors engaging in more trading than holding. He notes positive news regarding crypto adoption, with the House Committee pushing for Fannie Mae and Freddie Mac to recognize crypto as an asset for mortgage applications. He also touches upon the political landscape, mentioning Trump's upcoming meeting with Iran and NATO's defense budget increase, with Spain declining to participate. Coinbase and Robinhood reach new highs, while Circle shows signs of recovery. It's interesting to see how Bitcoin's resilience contrasts with the volatility of altcoins. This reinforces the idea of Bitcoin as a more established and stable digital asset, while altcoins remain susceptible to market fluctuations and retail investor sentiment. The news about crypto being recognized as an asset for mortgages is a significant step towards mainstream adoption. It acknowledges the growing importance of digital assets in the financial world. While there are encouraging signs like Coinbase and Robinhood's performance, the hesitancy among retail investors in the altcoin market warrants attention. Overall, this paints a picture of a maturing crypto market where Bitcoin is leading the charge, with adoption steadily increasing despite some persistent challenges in the altcoin space. In the latest video from Crypto Banter, David reveals a trading strategy boasting a 2,471% return with a 52% win rate, outperforming buy and hold on assets like ARB. This markup-based strategy uses a 45-minute time frame and multiple indicators, including the Zurich moving average for trend direction, a confirmation indicator, and a volatility indicator for entries. David highlights a member's success using this strategy on Blofin, achieving top ROI. He offers free access to the indicator on the David Tech website and promotes his Algo trading school and copy trading services. This strategy sounds impressive, but the 30% drawdown mentioned raises some eyebrows. A quick look at recent news shows that even experienced traders are struggling in the current market. While the high returns are enticing, it's worth remembering that past performance isn't indicative of future results.